Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scouten. Jumping into the charts on this August 30th. What a lovely day for our short positions and our swing trading accounts once again. And not only did we have another down day on the major indices, but this was a true broad market sell-off. So the two massive candles here, the last two down days, you still had strength amongst a couple sectors like utilities and energies. But today, the final kicker in the coffin was the fact that this was now an official broad market sector sell-off. All 11 sectors of the S&P 500 were down on the day, really solidifying that confirmation that we called yesterday. We said that the markets would likely have an 80% probability since you confirmed lower yesterday. Since you've made a third confirmation candle in a row on the back of all sectors now confirming the downtrend, that is going to dictate the even a higher probability, more than over 80% probability of more downside ahead. Now, that outlook is more for, say, the medium term within the next, say, 1 to 4 weeks. Within the next week, since we are oversold, we can get a potential bounce in the S&P 500 here. Now, it's really going to have to coincide once again with a falling dollar and yields starting to soften. But what I'm expecting now for the S&P, I think we're going to be forming a new range. I think we're going to be consolidating bearishly inside this range. So I think for the next couple days, we could see some choppy price action before that fall September volume picks up after the Labor Day weekend. So that's kind of what I'm looking for, just chopping inside of this range, inside of this red bar here. Ultimately, this is a decent size range for the spiders, which could propel some of the smaller cap to mid cap stocks a little bit higher in the short term. But overall, the medium term, long term, this market still is in trouble. Notice how we have tagged the 50-day moving average on this sell-off, but you slice through it like a hot knife through butter. That's never a good thing if you're a bullish person in this market. And honestly, even though the markets are short-term oversold and I would naturally expect a bounce, you're now approaching this key pivot gap area around this 3120 level, which could flush the markets right into that level. And as a day trader, I would much prefer a straight flush into that level, because then that widens the rate of change move that has occurred in this sell-off, which just puts into probabilities that we could have a bigger potential tradable bounce. So just because I'm expecting it to consolidate in a range here due to its oversold nature, there could still be another flush down, which would be from our current levels down another 1.5% straight into that gap fill. So if it does go straight into that gap fill tomorrow, I will be looking to play this level intraday. I will also be trying to have coincide movements around amongst other S&P 500 companies to catch that bounce over there at that technical area. So overall, the S&P finished down on the day 1.1%. The NASDAQ was also weak on the day, down 1.11%. Believe it or not, the S&P was basically down the same amount as the NASDAQ. One of the reasons being is the S&P had pressure from the energy sector. So the NASDAQ doesn't carry any energy names, as opposed to the S&P 500 does carry energy names, and I believe the energy sector was down the most out of all the sectors, just due to the fact that oil collapsed substantially. Now, you are at some support here for the NASDAQ as well, but once again, if the NASDAQ can break down and fill this gap, this would be a pivotal area to potentially trade and swing trade intraday, as well as a day trade or swing trade opportunity. So let's take a look at oil and what happened with oil. Oil collapsed. It was down over 6% at one point from the high to the low. It has had a substantial bounce off the low, but this type of price action in oil never signals a healthy movement or a good thing. Now, I've been hearing some sentiment that a lot of people saying it's just an overbought correction, but when I look at this, and let me just erase some of these trend lines just to make it a little more interesting. You can see how we were calling for this area. We were about 50 cents away from shorting oil, and it almost approached our level, and that would have been something beautiful to see. If we pulled that short right into our technical area, we would have been up over 12-13% on our SEO trade already, if that happened. And we were so close to executing that short. We were kind of telegraphing this move for the last, I believe, 2 weeks up into this area. And it's sad to see that it just missed our level by 50 cents. But nonetheless, this signal, this reversal candle in oil, like I said, never signals a good thing. The fact that you made a new high intraday and reversed, completely engulfing yesterday's price action. And you have to remember, yesterday's price action was a very solid day. That was a powerful uptrend in oil, move up, and then you completely reversed and engulfed that candle, closing now again below the 50 and the 200-day moving average, just slightly holding the 25-day short-term moving average. So not a very healthy price action in oil. And I still haven't really found a news-based event as to why oil fell this much. Part and parcel, I do think oil still has to go to the $76 barrel level with the backs of recession and with the fact that the central banks worldwide are trying to curb and crush demand as per the inflation narrative that is kind of going around now. And then honestly, you do have the 180 million barrel release that is set to occur from the SPR over the coming months, which is Biden's new SPR release plan. So that there's many factors that could be coinciding in terms of the fundamental side. But again, it's just clear as day that we were very close to shorting oil. But when you see this type of price action in oil, it is the most energy used in the world. So something based off of this price action in oil is signaling negative consequences for the economy in my mind. So it's very rare to see a sharp downturn in oil after a very bullish uptrend for the last 2 weeks, which engulfs a previous bullish candle. So again, let's take that with a grain of salt. We kind of are speculating as to what this could mean, but overall, when you see a type of reversal in the most energy commodity used in the world, you have to really take that as a signal that the markets could be in some sort of trouble in the not too distant future. Natural gas did have a down day. It is rallied substantially off the lows, but closing down 1.98%. You can see natural gas looks to be consolidating here, but in my mind, this isn't consolidation. This is actually distribution. There's still a lot of hype around natural gas trade. Mainstream news is still pumping it up as the energy to be in. It's the energy. It's going to be going to 20. It's going to go to $50. That is just ridiculous lunacy that has no absolute backing. So what I'm seeing here is a bunch of distribution occurring, and as smaller buyers are rushing in, there's clearly big buyers dumping in, but not dumping too hard, just enough to start unloading their position potentially from this massive rally that caused this institutional spike. So overall, you're still closing below major reversal candles here. You not only have this big one, you also have this one over here. You also have this topping tail here, and then you have all these wicks and reversal candles, which have been failing on now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 last trading attempts. So again, we're approaching a new monthly candle, which will form tomorrow. So we'll just have to start to see how that transpires. And you can already see by this monthly reversal on natural gas that this is still technically your monthly reversal top. Natural gas has failed to confirm now for the last 1 month and potentially 2 months to close above this previous wick high, which shows that this is still technical resistance on the largest time frame that you can analyze, and you have to respect that from a technical standpoint. I don't care what the fundamentals are, natural gas is still super extended, and when you factor in that energy costs have basically gone up 4, 5, 10x in Europe, that is just not sustainable. And honestly, people will adapt to using other means of energy, even in times where they can't really find other means of energy just due to the shortage. But overall, people will adapt, and that'll be changing of consumption habits over time. Let's take a look at gold, or first we'll take a look at the dollar. So the DXY was kind of a little bit up today, which is why markets were under pressure. Originally, you had initial sell-off. It looked like the markets were going to catch a bit of a rally, early day bid, and then the US dollar reversed back on the back of some economic data, and it pretty much just finished slightly positive. But again, you're still holding this bullish consolidation, and just because some people are so quick to use this topping tail as the high in the US dollar. I'm on the other side of the camp. I don't think this topping tail is going to hold. And we discussed this in yesterday's video. One of the reasons why I don't think it's going to hold is you have this more powerful hammer reversal candle, which has a way bigger hammer, a bigger tail, which shows that the buyer's strength to get through this, you're going to have a lot more selling pressure versus just comparing these two hammer reversal candles. So overall, I do think that if the US dollar is consolidating here, it will eventually break up and make a move to this top of this parallel channel. That's honestly where I have it priced into. You will have some longer term resistance. If we go to the weekly chart, you can see that you still are trading inside of this channel. You have yet to hit the top of that channel. So it makes me think that on a technical standpoint, you at least have to hit the top of this channel, because this is a channel that an exact parallel channel that you're trading in since 2005. We're talking about almost a 17-18 year trend where you've been able to pick the bottom and the tops in the US dollar, and that it's very difficult for price action to not fulfill a symmetrical trend or a move, which is why in most cases they do fulfill that symmetrical pattern, which means that we should see the US dollar to at least to the 110 mark, if not higher, to this upsloping channel. So let's first see if it can break to this 110 mark, which I certainly think is possible. If you get to the 110 mark, you may consolidate for a day or two before having kind of that blow off top, in my opinion, to the 1174 mark. And one of the reasons why this US dollar is surging, I'm going to have to do a little bit more research in terms of history and historical analysis, but this US dollar is signaling a sovereign debt crisis. And what we mean by a sovereign debt crisis is simply when you have this dollar surging and going on a parabolic move, the dollar is forecasting to market participants all around the world that some currency around the world is going to break. There's going to be some sort of a crisis, because when there's a crisis, people flee to dollars because it's still the safest fiat currency and it's the most stable and it's backed by the largest GDP and economic engine. So people fleeing to the US dollar is kind of foreshadowing that potentially some sort of country, maybe it's in Europe, maybe it's in Japan, maybe it's China, some sovereign country is going to be in some sort of a debt crisis where they potentially may be defaulting on what they owe, which is why you're seeing massive inflows out of all currencies, especially in Europe, China, Japan, rushing into the US dollar. So let's really analyze the US dollar moving forward. Again, tomorrow is a massive day because we get a monthly candle, and monthly candles are extremely powerful in terms of analyzing them on that longer term time frame. Let's take a look at the Bitcoin. BTC USD is testing that previous 2017 high, which is right now it's still holding support. So it's kind of still bearishly consolidating. I do not like this price action in Bitcoin. I'm not prepared to short it, but I am prepared to see this thing drop to the downside. I think the technicals and the charts are definitely saying that the minor time frame pattern, the short-term time frame, has a bear flag. The intermediate, the medium-term time frame has a bear flag. The longer-term major pattern, also a bear flag. So compromising and adding together the three time frames, Bitcoin is just hanging on by a thread, and once it starts to free fall and close below this previous 2017 high on a confirmation basis, I think it's in trouble. There's going to be a lot more pain inside the crypto market, just as I think investors have swallowed the losses from the Luna collapse, Ethereum dropping, Chainlink, basically every coin plummeting 60, 70, 80% down from the highs. And I think there's a lot more, unfortunately. And the interesting thing about this level, this 2017 level, is your previous pivot high in 2017, you have never confirmed below that level. Even after this multiple harsh, I think it was 9, 10, 11 weeks of downside, you never confirmed below this previous 2017 high. So as soon as we get that confirmation below, then look out for the downside in the crypto markets. Bitcoin will pull this market much lower since it is still the king crypto. Let's take a look at silver. We haven't touched base on silver in a while. Silver is kind of testing that double bottom support. I would actually like to see silver make a new interim low. That's kind of what I'm waiting for. I've been very close to add to our SLV position. I do like silver miners. We have a small position in Pan American Silver, PAS, which I do think can have a tremendous technical bounce. Once the US dollar starts to soften, it should light a fire under the metals. And silver, again, you've seen this bear flag trigger and break. I think we're going to take out these lows on silver, but I think it's going to be a quick reversal off of that level. You can see that we have this downsloping parallel channel where we've been trading in for now almost 2 years, just over 2 years actually. And that support line, until proven otherwise, is still technically intact. Not only do you have this downsloping parallel channel as support, but you also have these major pivots going back your pre-COVID highs all the way back to 2017. So lots of technical support. If you're a silver trader, these are the levels where you have to be taking shots, because these are going to give you the best potential opportunities as you potentially could catch that technical bounce as we see the dollar heading into that major oversold or overbought condition. Analyzing let me just touch base to see if there's anything else we need to cover. We did cover a couple of our positions today, so congratulations on the winners. We covered AMD short for a beautiful 10.5%. We covered our ADI short for a beautiful 4%. That was just a small gain. That was kind of a position that basically I was disappointed with our entries and our overall average. It went a little bit higher, but these are the ones that you learn from, the ones that don't typically go according to plan. We were still able to squeeze a profit out of it, but one of the reasons I covered now is because you are into support. You're in a short-term oversold condition. This bear flag pattern has completed its measured move. So you know what? I just wanted to take our profits because 3 or 4% on a fairly large position, it frees up our capital in the event that this does bounce. I have no problem accumulating another short position on this trade and having free working capital to put to good use in potentially other higher probable trade setups. So we still netted a gain, but I wanted to just quickly close that one because we have held it longer. Ultimately, long term, I do think we're heading to the lows here. You can see you clearly have a downsloping wedge pattern, which we kind of broke out, and you failed to hold that support level. So the bulls would have liked to see you hit this downsloping trend line and bounce, but you've sliced through it. Basically, no support there, which means that you should be close to some sort of a potential technical bounce, which brings you back to that resistance level. And you could be rolling over after you get that bounce off of that level. So overall, if you look at every sector, down, XLF down, XLE, the hardest one hit today, XLB down, XLS, staples, utilities. So a complete confirming downtrend once again in the markets. The big one we're watching is the XBD. You got 2 consecutive down days confirmed on back-to-back down days with the S&P 500. When you have the XBD, the broker-dealers confirming the downtrend along with the S&P 500, it's a very strong probability that the market's heading lower. And then when you throw in the Dow Jones Industrial Transports confirming the downtrend for not 1, 2, but 3 days in a row, throwing that in with the S&P and the XBD, you have a pretty much the highest probability chance of seeing more downside in the market over the coming days. So again, lots more downside to happen, but I do think we could potentially get that technical bounce. Let's just touch base on the US 10-year yield. So the US 10-year yield was positive again today, obviously signaling that the bond market does not think the Fed is pivoting anytime soon and lowering. I'm still in the camp that you are at resistance, which is why we picked up the long end bond yields, which we're already in the money on. And there's a difference between the short end bonds and the long end bonds. We're playing the long end bond yields because those are kind of at better technical levels and have put in more reversal signals and distribution patterns that do favor a pullback in the long-term yields, which should lift our bond play. So overall, you can see that along with an extended dollar, you have an extended yield market. So if yields continue to push up, it should strengthen the dollar. But if yields also fall, which I do think in the short term they should fall, maybe down to this 2.93 mark, then that should also soften up the dollar, which will help equities bounce in the short term. Maybe it'll happen over a 1 to 2 day period where yields soften and the dollar soften. But there will come a point where as yields start to fall, it's not going to have that effect on the market that you think, where typically lower interest rates mean that the market should have a technical bounce and resume higher as borrowing costs get cheaper. But there comes that point in bear markets where falling yields is never a good thing, because it's a good thing for a very short, brief stint, but it becomes a very bad thing when yields start to fall due to the economy slipping into a deep recession, which signals the Fed pivoting. And usually that coincides when you start having the unemployment numbers really start to uptick, and that's when you put the unemployment numbers on the radar of the Federal Reserve. So there's still lots to analyze as we move forward, but congrats on the day trade winners today. We also day traded Alcoa, which I put in the chat for everyone. That was an easy day trade to execute. But overall, we're banking winners left, right, and center. We have closed 32 winning swing trades in the month of August with no losing swing trades. And I've also closed 40 day trade winners without one single loss. So these numbers don't come around often. I'm very humbled because it's my best month that I've ever traded in. But again, we're trying to stay nimble. We're trying to read the interconnected market analysis to give us the likeliest outcome in terms of where price action is going to head, or likely going to head. So overall, congrats everybody. Thank you for being members. We'll continue providing as much insights and updates as we can. I do think these markets will head lower over time, but I do think we're getting close to somewhat of a small technical bounce in indices and some certain names. And I just want to point and mention that those short trades that we took basically 1 and 2 days ago on Hess, and what else did we do? We did NTR, we did CNQ, we did CF. We're already deep in the money on all 4 of those additional shorts. So those are the type of things. I mean, let me just pull up some of those charts. We issued this short alert on CF. Look at this. We're basically almost ready to take profits after holding this for 2 trading sessions. Not even a full trading session on the entry. So basically it's 1.5 trading sessions. We're already almost double digits in the money. Then we look at ALB. Oh, that's the wrong one. We look at ALB. We're already deep in the money. We shorted at this 292 mark and change. Already deep in the money, falling hard. Then we look at Hess. Hess isn't as deep in the money, but it's certainly also starting to perform well for us on the short side. And we've just been in this for basically 1 trading session, these trades. So, even if you look at NTR, so these were the last 4 shorts that we entered, boom. They are starting to pay us handsomely. And then you talk about a stock pickers market. When we look at a stock pickers market, the market was down today, but one of the long positions that we're in, SC, was one of the only stocks up today, 1.63%. And then another long trade that we hold, SNY, what do you know? Also up on the day. So despite us being short, I'm not afraid to go long, even when I think there's downside in a market. When certain names move against a market, I love those setups, because it means that not a lot of people are looking at those stocks, and you generally can get a big oversold bounce as many people are paying attention to the broad market and not really versatile in picking stocks that are under pressure, but more likely to have those technical bounces even if the market is falling. So those are the trade setups that I love. It's kind of a hedge against the markets, because even when we're so short, net short the market, sometimes obviously when the markets bounce and go against you, you take a big hit being net short. So I love having longs on the table, which I think can have a technical bounce, but I also prefer being net short at this period of time, even though we've started to cover a bunch of our shorts. So overall, when your hedges are starting to perform, also make you money in a falling market, that is truly exceptional. And we have longs out there that are hedging some of our shorts, and pretty much both were performing today. So that's it for today's video. Please give this video a big like or comment down below.